Positioning remains the most important thing to be doing right now, especially with the volatility that we're facing. What is going on, everyone? Happy Tuesday. Welcome back to the channel. Such a weird day in the markets for risk. We had risk trading higher, dollar lower, and a bit of ping pong between the two. We had some earnings reports out earlier today, which did assist and stem from a risk on rally. So you saw the likes of the Dow, the S&P hitting highs, as well as the dollar in between that 111, 780 and 112 region. So I'm here to break that down in this video and also share what positioning means to me and how to capitalize on that overall. I'm in a trade right now, so we're going to share that too. So stay tuned in the video. Not because this is a dollar related video, of course, but as we know, dollar, the first thing I look at every day. Before I look at anything else, I want to know where the dollar is positioned. It is simply all about positioning. If you can position something, you understand the narrative, you know if it's out-driven flow or if it's an actual move. And I'm here to explain that today. So dollar, obviously, we understand, looking at this on the 4 hour and just zooming out a little bit, we can see price is still bullish. We know the Federal Reserve are going to continue raising rates. Nothing has changed on their path. So naturally, in terms of positioning, you should have a higher dollar. The fact that you do have some outflows of the dollar to simply buy euro and pound, which is something we saw yesterday, you want to use that to your advantage. So the fact that if you just take a look at the likes of euro yesterday, this rally straight into the high, straight into a key area of interest. Cable, straight little rally, straight into a key area of interest. This was off the back of a U-turn, as I'm sure you saw yesterday's video. A U-turn in the UK in terms of politics. We saw that optimism come back into the pound and the euro in general. So nice little relief rally, in my opinion. Looking at the likes of the dollar, you still want to ask yourself, okay, am I still bullish dollar? For myself, I'm still bullish dollar. As I have reiterated, it's where we're bullish from. That is the most important thing. So for myself, I do like where price is. I'm currently in a short position on something, so stay tuned in the channel. I'll share in a bit. So looking at the price action on the 30-minute time frame, we have had a test to this level twice today. Once, twice, prices attempted to break back above but failed to sustain due to the risk on day today, simply because of earnings. A little bit of optimism, right? Further optimism from the UK U-turn. So that is still holding risk assets higher. You got the likes of the Dow, the S&P trading off of the highs, but still higher on the day. So it's all about positioning. I remain a dollar bull. So what does this mean? It means I want equities to sell off. So that means I'm still bearish equities. Regardless of the relief rally that we've seen right now, I personally still favor equities to trade lower. So for myself today, I did witness this initial boost up in the dollar, and that is what sparked my interest, because I knew in terms of positioning, this decline that we've had on the dollar is not bearish for the dollar. It's just a repositioning on other asset classes, which has driven dollar lower. So it's all about positioning, right? If you zoom out and understand overall why something is trading the way it's trading, in my opinion, dollar still remains bullish. That being said, you had the likes of euro today. For myself, Aussie, and I've left my risk reward on this chart now purposely to show you. This was a trade I broke down on my live London session with the most conviction I've had in any position. And we came about 9 pips away from my stop loss. And I'm sharing that for complete transparency. This is what I like to call a touching cloth moment. Very, very close, right? Very, very close to my stop loss over there. As we had those earnings releases, risk was on, dollar was off. This assisted in Aussie trading higher. Does that change where I want this to be trading? No. Could I be early? Possibly. Could this position still stop me out? Yes. I understand the risk. I'm taking that risk fully on board. Looking at the weekly time frame on the Aussie, I do like where it is. I do understand, and I reiterated this morning on my live call, that euro and cable, I'll show you briefly, have broken the COVID low. and died past the COVID low, right? You got, no pun intended there with die in COVID, but you know what I mean, right? The COVID low got broken. Fine, on cable. You look at the Aussie hasn't touched that flash crash low of those COVID lows. So looking at the prior trading week, in my opinion, price is still very bearish. Let me zoom in, right? Prior trading week's bearish. In terms of basic technical analysis, no fundamentals at all. If the prior week's in your favor, as a trader, you want to jump on the back of the highest possible place on the next trading week to ride in that direction. Looking at the daily, the prior day isn't the greatest, right? I understand that. The 4 hour, I do like a bit of a rejection, just a massive shoot up in price, immediate reversal. So whatever price didn't like being up at that high. Why? The narrative still stands of dollar higher. It is simply where we're going to get dollar higher from. Now, I'm still in this trade, right? I'm still hoping for this to follow through. But like I said, I'm happy with the risk should price stop me out. If price stops me out, that merely tells me that I was early. Doesn't mean I'm wrong. It means I'm early. And this is obviously the risk that I have exposed. I have 0.5% risk of my account on this position, which means if this trade does take me out, I've only lost 0.5% of my account. Emotionally, it's better to do that. You remain calm at every moment. Regardless if price is approaching your stop loss or not, you do not alter your position. You leave it alone. You've calculated that risk for a reason. You got to learn to breathe, let the market do what it's got to do, and allow the trade to obviously play out. So for myself, this simply means I require a dollar higher. If I have a dollar higher, my Aussie and my Euro are going to follow through. If I require a dollar higher, equities need to peak. Equities need to roll over. By the looks of this reversal, we may see a bit of a rollover, which could give me a bit of a low on Aussie. I do have an alert there at 62.50, which will be an area possibly that I'll take some partials on my initial entry on this trade. So the daily time frame obviously extremely important to close today with that spike into the high. In terms of fundamentals, we did have an announcement from Bullock, the assistant governor for the RBA, reiterating that going forward, further interest rate hikes are imminent for the RBA. So we had that rally this morning, that initial little spike up, which I knew, the RBA only raising rates again in December. That's still a month and a half away from where we are now. Do we care? Yes, we care, but I'm more worried about dollar higher. So that's pretty much it from me, guys and girls. And today's video's lesson is to understand the positioning. If you understand the positioning of where dollar is, and you actually understand why it is where it is, more importantly, where it's heading, you're obviously going to have that extra advantage of the markets on top of your technicals. So combine the two, get a better edge in the markets. And yeah, I hope you enjoyed today's video. Do like, comment, share, subscribe. Obviously, I'll see you on the next video. Take care. Bye-bye.